business news, we're news for business people.
Good morning. You're watching Daybreak on Bloomberg Quint Live, and I'm Alex Matthew. Over the next half hour, we'll tell you everything you need to know to begin the end of your week on the front foot. First, the headlines. Asian equity markets trade mixed in early morning trade after some regional indices shrug off early losses. US imposes fresh sanctions on Russian agencies found to be meddling in the 2016 presidential elections. Shareholders that are part of the VTB Bank-led entity that's bid for SR Steel have written to the company's creditors offering to buy out Rewant Ruia's stake. And the country's largest defense manufacturer, Hindustan Aeronautics, hits the primary markets today. With that, let's turn to the international markets. The Dow Jones Industrial Average in the US ended higher on Thursday as some investors took advantage of the market's ongoing slump to help the blue chip index snap a three-day losing streak. The S&P 500, however, finished lower for a fourth consecutive session, its longest run of daily losses since early December. The Nasdaq Composite fell for a third straight day. Bloomberg's Abigail Doolittle has this report on all the action from Wall Street.
It was a mixed finish for stocks in Thursday's Wall Street session. The Dow climbed by about 0.5% on the close, but both the S&P 500 and the Nasdaq fell somewhat fractionally, but nonetheless, both of those indexes really whipsawed between gains and losses on the day, a continuation of the intraday volatility that we've seen all week. Now, on the week so far, the three major averages are lower. The S&P 500 down more than 1% on the week. In fact, the S&P 500 down for its fourth day in a row, the first four-day slide of 2018. Not surprisingly, most of the S&P 500 sectors were lowered. On top, just three sectors, including the industrials, financials, and tech, relative to some of the outsized laggards. We're talking about some of those energy pipeline-related companies, EQT and Williams. This after there was a tax situation that came to press from FERC that weighed on those shares. On the other side, though, again, it was a small loss for the S&P 500. Helping the index was Dollar General, up nearly 5% on a strong quarter and decent guidance. Plus, Broadcom higher on the day ahead of the company's earnings report, which came out after the bell. After that report, where they beat pre-announced numbers and gave basically inline guidance, shares fell a little bit, down about 1%. Some are saying that the guidance maybe just a little bit disappointing there, but overall, over the last 24 hours, Broadcom actually up over those last 24 hours. Now, when we go cross asset class, not a lot of risk off action there. Haven bonds, in fact, selling off, so that points to somewhat of a move away from havens. The Japanese yen about flat. Gold a little bit lower. The VIX also lower, that quote-unquote fear index. So net-net, Thursday's Wall Street session ended with a mixed close for stocks, but without a haven bid. It was really a neutral risk appetite tone. In New York, Abigail Doolittle, Bloomberg News.
Well, there's an update into the ongoing probe into the Russian interference into the US presidential elections. The US has issued financial sanctions against two major Russian intelligence agencies, along with the St. Petersburg-based troll farm and other Russian citizens and businesses indicted by Special Counsel Robert Mueller on charges of meddling with the 2016 US presidential elections. Let's take a look at the Asian markets now, and they've opened mixed in early morning session as investors digest overnight developments relating to global trade and, of course, the ongoing Russia investigation. The Nikkei, in fact, has increased losses. When I checked earlier, about half an hour back, it was down about 0.1%. It's now down 0.35%. So we'll have to watch how the rest of the Asian peers do in early trade. But for now, Darshan Mehta is here to tell you all about what to expect in trade today. Morning, Darshan. How's it looking at the end of the week?
Well, good morning, Alex, and many happy returns of the day to you. As far as the markets are concerned, it seems that the SGX Nifty is not on decent footing at this point of time. The losses have increased. It's down almost 40 points at this point of time. So we're inching close to the 10,300 mark in trade. Now, if you're looking at what's happening with the ADR pack, again, there doesn't seem to be too much confidence that's coming in. Counters like Vedanta were down. No doubt HDFC Bank was the only one that managed to stand out with gains of over 1%. Vedanta was down almost 1.2%. The other counters were up. So Tata Motors, Infosys and ICICI Bank, all of them ending with losses. Now, crude is up for the third day, but it is minuscule gains that are coming in. For the third day, less than 1% gains that are coming in. It's managed to actually, in fact, slip into the red as we speak right now. So there seems to be a little bit of pressure that's coming in. As far as base metals were concerned, it was a mixed closing. Some of them ended better, some of them didn't. So if you're looking at it, you had aluminium and copper which fell in trade. Minuscule gains coming in for zinc as well as lead, but apart from it, weakness coming in. And as far as China is concerned, copper, zinc, aluminium and steel, the four down there, all of them have actually managed to open with a negative bias. Precious metals as well as are trading with a negative bias currently. As far as fund flows are concerned, if you're looking at the fund flows, FI sold in 700 crores in the market and DI has bought in 256 crores. Individually, some of the stocks that sectors that you need to watch out for. Yesterday, the mid cap, the broader markets managed to outperform. So mid cap and small cap were up in trade, while the Nifty Bank was seeing significant amount of weakness that came in. If you're looking at the Nifty Media, Nifty PSU Bank, oil and gas index, all of them actually seeing selling pressure that actually came in. Apart from it, if you're looking at what the Nifty did, the Nifty was down 50 points, mainly on account of Reliance, ICICI Bank and HDFC. HDFC Bank provided a little bit of support to the Nifty, but apart from it, it was rather weak on the Nifty. We were down almost 50 points.
What are the trends in the F&O space telling you about the levels that we're likely to see?
So basically, there is significant amount of call writing that is happening, and I'll tell you what that is indicating. But on the Nifty yesterday, fresh short positions were seen. Open interest build-up was at 3% and the index was down 0.5%. As far as the Nifty Bank was concerned, the Nifty Bank also fell in trade, but that actually saw long unwinding that came in. Over the past few days, we've seen significant amount of long positions being built. Finally, that was cracked on high open interest drop of 5%. The index was down in trade. Now, if you're looking at where positions are taken, here you can see the 10,400 and 10,500. The green line is bigger than the red line, which gives an indication that the bears are much more active, because we're looking at the call writers perspective. So it seems that at this point of time, 10,400 is the big resistance that the market is facing. No doubt put writers are active at 10,200 and 10,100, but if the market falls, the speed at which it will go down will be much higher, because positions at 10,300 and 10,200 are significantly higher. Now, what happened yesterday, and you can see call writers are active at the 10,500 and 10,400. Call writers became active, and at positions from 10,200 to 10,400, positions were getting shut. If the Nifty manages to stay at this level and the drop is over for almost another 40-50 points, again you will see this green line going up significantly, and there will be this green line will also increase, and the red lines will actually start falling significantly. So it's a bearish signal what this chart is basically showing you at this point of time. Now, if you're looking at the PCR, the Nifty PCR fell in, the Bank Nifty PCR also fell in, because the green line was much higher and the red lines were seeing declines that came in. So the call writers were much more active. Now, if you're looking at the stocks in the F&O band, these are the counters that are in the F&O band. So Balrampur Chini, Bank of India, BEML are in the F&O band. The other stocks in the F&O band are Dewan Housing and TV18. Now, there are some stocks that actually went out of the F&O band, Andhra Bank, IDBI and JP Associates. So JP Associates again will be in focus. It's out of the band, and a big block deal of Rakesh Jhunjhunwala happened yesterday. Now, in terms of stocks that you need to watch out for, Divi's Labs saw high open interest build up of 8% on the long side. You had other counters like Amara Raja Battery, which saw high open interest build up, but this was on the short side. The other stocks in focus is NIT Tech, again hit the 1,000 level in market, at least on the cash side. High open interest build up on the long side. You had Mindtree again, which continues to move at its 52-week high. Fresh buying positions were seen on the counter. And finally, JP Associates saw short covering. Open interest bar down was 8%. The counter was up 17%, and probably again because of the big bull buying, again you might see a lot of interest build up on the counter today.
Thanks so much for that, Darshan. Now, there are differing views about where the market is heading from this point. And one particular view that's is coming from the co-founder and the chief global strategist at First Global, Shankar Sharma. And he says that the recent declines in the equity market are only blips. While he was speaking to Bloomberg Quint's Tamanna Inamdar, Sharma brushed away any concerns of a bear market and said that the bull run is here to stay with all the action happening in the small cap space. Here's a slice of that conversation.
In a bull market, you will have these occasional situations lasting anything between, from a few days to 2 or 3 months. That doesn't portend any bear market or anything very significant. In my view, it was long overdue. When it happens, we always find some reasons to intellectualize it, like we can say long-term capital gains in India, or bond yields spiking up in the US. But I think it's just a very normal correction, nothing more than that. So I've seen plenty of these, which are fairly routine. Yeah, eventually at some point you will get a bear market, as is inevitable in any asset class, but we are not there yet at all.
Okay, I've been reading some of your quotes in interviews, and you often talk about how you prefer small caps to large caps or even mid caps in terms of returns. Isn't this a very risky proposition, especially when so many people look up to you for advice? Is the risk worth it in the small cap space?
Well, I mean, I don't go out and say that any particular stock should be bought, because it's ultimately, if I risk my own capital, presumably I've done my homework. But it's not an easy space to work in, because obviously these companies are have gone through some trouble, some problem. There have been management issues, or they can be outright new companies without much of a track record. So in any of the situations, for an outsider to make a informed decision is very, very hard. It's hard enough for us. It's even harder for somebody who's not engaged full-time into investing. So I do not recommend this as a strategy to be followed by recreational investors. That said, even if you had passively bought a mutual fund which invests only in small caps, you would have done very well for yourself over the last 4 years. I do not see that changing. I think the bull market in small caps is very young. It's very vibrant. These corrections of the kind that you saw when stocks can fall 30%, par for the course. You should be prepared for them. You should be able to live through them. In my view, that is the best space to be in. We go looking for more troubled spaces in the small cap space, but even in the so-called more normal spaces, there is plenty of money to be made. Of course, for a small investor, the best place is obviously a fund. There are very good fund managers out there, and I think while you will not get as much returns as directly buying in the market, I think risk-adjusted you will be very, very well off. But in either event, in either strategy, small caps are the place to be in India. I do not think that the large caps are going to give you anything very spectacular. In fact, even if you go back last 4 years, the returns from large caps, in my view, like 12.5% Sensex or Nifty returns is very tepid relative to the volatility you undergo in equities. Versus that, small caps have given 40% plus compound annual growth in the last 4 years. That kind of return attracts me. A 12% return is a nothing return. So you already have a big divide in the large cap and the small cap return universe, and the spectrum of returns. It's very clear where an investor needs to be, and which is the small cap part of the market.
Well, that's one view, but several views, of course, on where the markets are heading at this point. Let's take a check on the rupee and the bond market now. Saloni Dhanuka has all the updates in those two markets. Morning, Saloni.
Good morning, Alex. So the rupee yesterday snapped a 3-day winning streak, and it ended 10 paise lower at 64.93 levels against the dollar. Now the domestic currency yesterday dropped nearly 0.2% against the greenback, thereby marking its biggest fall in a week. Elsewhere, trade deficit for the month of Feb widened to $12 billion as compared to $8.9 billion seen same month last year. Well, it came well below the Bloomberg consensus estimate of 14.2 billion mark for the month of Feb. Moving on to the debt market, bonds advanced most in a week yesterday on speculation that the government may increase foreign investment limit in the sovereign bonds, and hence yield on the 10-year benchmark security dropped 5 basis points to end at 7.63%. In terms of flows into debt market, global funds reduced their rupee debt holdings yesterday. They reduced their portfolio by approximately 1,640 crores according to NSDL data. Well, on the global front, dollar index erased its weekly losses after White House economic advisor Larry Kudlow favored a strong dollar policy for the economy going ahead, and hence it ended higher for the second consecutive day, well above the 90 mark. Elsewhere, both euro and pound slipped 0.5% and 0.2% against the dollar respectively. And lastly, coming back home, dollar rupee is trading at 65.04 levels against the dollar in the non-deliverable forward markets, which indicates a weak opening for Indian rupee in today's trade, Alex.
Thanks so much for that, Saloni. Now, you briefly mentioned the trade deficit. Let's talk about that for a little bit. India's narrowed its trade deficit in the month of February. The gap now stands at $12 billion, falling from the 4-year high in January. The trade deficit widened 36% from a year ago, but it was significantly lower than last month. Last month, the deficit had stood at $16.3 billion. A weaker Indian currency seems to have aided exports, with India selling goods and services worth $25.8 billion last month. That's a jump of 6.2%. Commerce Secretary Rita Teotia said Indian exports are estimated to end the year with a growth of 6.5%. What could prove to be a dampener, though, is the recent offensive on trade by the United States, which is India's second largest trade partner, with whom India has a substantial trade surplus. Donald Trump and his new economic advisor have already said that they will up the ante on reducing the country's large trade deficit, and have actually gone ahead and complained against India at the World Trade Organization. Let's now shift focus to the commodities market, and Jayesh Khilnani has all the updates there. Morning, Jayesh.
Morning, Alex. So oil prices have been holding on to their gains for the last 3 days, currently trading absolutely flat, but on track to close down for the week. Now, this is on the back of US crude production that rose for a third week to a record high. Also, that the International Energy Agency has warned of an impending shortfall in global oil supplies. So, mixed cues coming in for the oil prices. As far as the base metals are concerned, the base metals closed lower except for zinc and lead. Aluminium came in at a 3-month low as Chinese winter ends, and that ended about 0.2% lower. Copper snapped its 2-day winning streak to end about 1% lower. But the top loser was nickel, which ended about 1.5% down. And if you look at the Shanghai Futures Exchange, most of these base metals have started trading on a negative note. As far as precious metals are concerned, gold prices actually fell overnight for the most in about 2 weeks after Larry Kudlow's signal that Trump would actually support a stronger dollar.
Thanks so much for that, Jayesh. Now, there's an update in the race to buy Essar Steel. In a bid to make it a more suitable bidder, shareholders of Numetal Mauritius, that is part of the Russian VTB Bank-led entity that's bid for Essar Steel, have approached lenders offering to buy out Rewant Ruia stake. Remember, ArcelorMittal India, in partnership with Japan's Nippon Steel and Sumitomo Metal, is the second bidder. Now, let's go across to Vishwanath Nair, who is joining us on the phone line. Vishy, what does this essentially mean, and will it really make a difference at this stage?
Morning, Alex. So essentially, this offer comes on the table because under the Section 29A of the Insolvency and Bankruptcy Code, a promoter who has been associated with a defaulting company cannot actually bid for an insolvency account. So to that effect, removing Rewant Ruia from the shareholding of Numetal could help the Numetal shareholder into submitting a successful bid. Now, both bidders, including ArcelorMittal, both have actually submitted their bids in last month. And at this point in time, the resolution professional, Satish Gupta, who has been appointed in Essar Steel, is going through these proposals. He is trying to establish eligibility and seeing if both the bidders comply with all the norms under the IBC. That process is still going on, and from what we know from our sources, is that the company Alvarez & Marsal, which is acting as an advisor to Satish Gupta, has actually outsourced this due diligence to a foreign company. So that is happening and is currently at a crucial stage. It should get done in the next few days, after which they will be submitting their eligibility report and whatever their opinions are about these two plans. After which the committee of creditors will meet, they will look at this plan, and then they will decide whether they need to remove Rewant Ruia from the mix or not. Remember, the IBC allows you to change the shareholding structure of your bid or of your company after you've submitted a bid, but only if the committee of creditors approves of it. So that is a crucial step that's there. So that will only come after the RP has submitted his report. So that's what we're waiting to see right now.
All right, thanks so much for that, Vishy. We'll stay with the story, of course, and bring you all the updates in that and more in the insolvency proceedings. Let's head across to the primary markets now, and there's a spate of companies looking to raise money in the primary market. The one that we're talking about today is India's largest defense manufacturer. We're talking about Hindustan Aeronautics Limited. It's looking to raise over 4,000 crore rupees through its IPO, which opens for subscription today. Somit Sarkar is standing by with what's on offer. Somit, tell us about it.
So this is the 9th IPO of 2018, and again it's a government-owned company. So this time it's Hindustan Aeronautics, which is looking to raise as much as 4,200 crore rupees from the primary market at a price band of 1,215 and 1,240. And at the upper end of the price band, that is 1,240, the market capitalization of the company on listing would be close to 41,464 crore rupees. Now, if you see, Hindustan Aeronautics is not only the India's largest defense-owned company, but it is also the 39th largest aerospace company in the world. Now, the company's order book as of December was close to 68,461 crore rupees, which gives a good revenue visibility over next 3 years. Now, besides this order book of 68,460 crore rupees, the company has also received a request of proposal from the Ministry of Defence for procurement of helicopters and aircrafts worth another 64,500 crore rupees. Now, it's a Navratna status company with 5 manufacturing facilities located across India. Now, the company not only manufactures but also designs, develops and repairs aircrafts, helicopters and aero engines. Now, if you see, the company's main client is the Indian Army, but over the years the company has also exported its goods to foreign countries like Nepal, Maldives, Mauritius, Afghanistan, Namibia. And you can see, but the export still contributes a very small part to its revenue. It contributes only 3% to its total revenue. Now, if you see, the company has been generating most of its revenue from selling its products, but over the years, the contribution of service revenue to the total revenue has increased. Like in FY15, it contributed 21%, which has now increased to 40% in the first half of financial year 2018, while the manufacturing goods contributed around 58% to its total revenue for the first half of financial year 2018.
All right, Somit. Now, most companies in the defense space are government-owned and they've enjoyed near monopoly. We'll have to see if that changes. But as of now, how does the company's financials compare with its peers?
So there are no peers because this is the only helicopter and aircraft manufacturing company in India. And so if you see its financials, over FY15 to 17, its revenue, net profit and EBITDA grew at a compounded annual growth rate of 7%, 63% and 26%. And on the balance sheet side, if you see, the company is a debt-free company with a book value per share of close to 387 rupees per share. And also, as of September, the company had a cash balance of more than 11,600 crore rupees, which translated into a cash value per share of around 350 rupees. On the return ratio side, the return ratios were stable. The return on equity was at around 21%, return on capital at 9.8%, and return on asset at 5% for financial year 2017. On the valuation side, now I'm comparing it with Bharat Dynamics, which closed yesterday, and also with Bharat Electronics, which is a government-owned company with the same client, that is Indian Army. Now, the price to earnings for FY17 is cheaper at 15.8, market cap to sales is 2.3, and EV to EBITDA is 9.1. Now, the reason why I'm taking FY17 valuation is because there's a cyclicality in the business of Hindustan Aeronautics, and it gets a good part of its revenue in the second half. So we cannot see the FY18 numbers from the given first half of financial year 2018 numbers. That's the reason we are taking the FY17 valuations. Now, on the brokerage side, if you see, most of the brokerages have a subscribe rating on this IPO because the company does not have any peers, and also on the back of its strong order book, robust order inflows, and its leverage-free balance sheet.
Thanks so much for that, Somit. Now, small update in the primary market now that we're talking about it. Bandhan Bank IPO that opened yesterday has been subscribed as of now on the first day 0.4 times. With that, let's turn to the stocks in news. Shraddha Babla has all the stocks that you have to watch out for in trade today. Morning, Shraddha.
Good morning, Alex. So first up is Power Finance Corp, which has said that about 17,000 crores or 6% of their total loans, which are towards private sector, private power sector loans are actually at a risk of NPL classification, and they're likely to see some sort of haircuts. Additionally, according to Financial Express, the power minister will meet industry lenders on new RBI norms today. So watch out, apart from bankers and power producers, also for the likes of PFC and REC. You have Future Consumer, which has signed a 50-50 JV pact with Bin Ablan Group of Dubai. It's a FMCG manufacturing and distribution company. You have Puravankara, where the company said its unit is going to be investing 500 crores for a Goa affordable housing project, and the project is expected to deliver a sales volume of close to 1,000 crores over the next 5 years. You have Adani Transmission, which has acquired 100% stake in Fatehgarh Badla Transmission SPV from PFC Consulting. Bharat Financial Inclusion, they have completed the third securitization transaction for the financial year FY18 for 451 crores. Gravita India could also see some positive reaction on the back of order wins of about 300 crores. And lastly, in a bulk deal in Arvind Limited yesterday, Nordia Funds sold 24.7 lakh shares. So watch out for that name as well.
Right. Let's move on to a big update from yesterday in the political space. The YSR Congress yesterday gave notice for moving a no-confidence motion against the BJP-led NDA government. This is because of the centre's refusal to grant special category status to Andhra Pradesh. YSR Congress President Jagan Mohan Reddy has reached out to many parties seeking their support because a motion needs the support of at least 50 MPs. We spoke to senior journalist Nilanjan Mukhopadhyay for his views on how this will impact the NDA, whether it will impact the NDA in the first place. Listen in.
So no confidence motions are not to be seen only as, whether it will go towards this logical end of actually expressing or adopting the motion or not. Rather, it should be seen that this is an occasion for Parliament to debate very serious disapproval of the government. Now, this is the first time that there is a move like this against the Modi government, and I think it's a huge turning point in the way the Modi regime has functioned in the last 3 years, and it has to be seen in conjunction with the various political challenges which are coming up in front of the government, be it in terms of lack of employment, rising rural distress, by-election results which are not going in favor of the BJP, at least in the major, the heartland states. So I think it adds to the general discomfort of the BJP, and frankly, if I was in the party or in the government, I would not be sleeping very peacefully tonight.
Well, that's a view coming in. Irrespective of whether the no-confidence motion goes through, BJP has things to worry about. Let's move on now and talk about the stories that you can find on the website bloombergquint.com. Of course, you can find all the live market action right here on Bloomberg Quint Live. But here are a couple that you can see on the website. The leaders of the US, Germany and France said that all evidence points to Russia being responsible for the poisoning of 2 people in England and called for an urgent explainer from Vladimir Putin's government. The incident involved the first use of a nerve agent in Europe since World War II. Putin is yet to make a statement on the matter. In an exercise conducted after the PNB fraud came to light, state-owned banks have determined that no other fraudulent guarantees except those already reported by the Punjab National Bank were found at any of their 5,000 branches that deal with foreign exchange. Well, that's all we have for you on this edition of Daybreak, but all you need to know is up next. Do stay tuned. This is Bloomberg Quint.